Ira Epstein of Linn Associates with your agriculture update for this Monday. This is the 1st of April. No, it's not a joke. It's April 1st, 2019, and we're pushing 1:55 p.m. Central Daylight Time. So what happened in the grains is a bounce today. You know, we got a very big surprise in the grain markets with the size of corn acreage that's going to be planted and what's going on. And that was Friday when the market was down about 17 cents. You're getting a bit of a bounce, but above the market, likely to be sellers that were caught hoping to get themselves out down there. Could it be new buyers in the market? Well, it always could be, but with large crops coming at you, you don't know. I can tell you we've got to be getting close to something. I have terrible allergies, always had, and during the first part of when the growth season begins, you know, the buds come on the trees and all, even though we're 20s in Chicago right now, I had an attack this weekend. It's lasting right through now. And that always gives me the alert as to what it is. And yeah, I take remedies and so on. I went to school in Arizona because of it. I know how bad it can be. And it lasts a week or two, and then if you're on the medicine, you're okay. But it's beginning. That is my point. So you got to bounce through there. You're very flat in all the currency markets. The stock market remains on a tear to the upside, lifting a number of different markets as the market is saying China's doing a little better in their manufacturing and the U.S. is looking a little better. So as we come to a weekly area chart of just closing prices, for the past couple of weeks, the market has been playing around either getting below the 18-week average, and it had been above it for quite a while, frankly, since September, October, November time frame. Then it nosedove after the beginning of the year, and it's having trouble on rallies staying up there. That number is 903.25. When you take a look at the chart, let me explain one of these things. Here is the market close on Friday. What's the first thing you look at? I'm praying that you look and notice you have an outside day down. One of my rules is if you take out the high of an outside day down within 2 trading sessions on a daily chart of it occurring, I label that a trap for the bears. The people that sold it all the way down here when the market, if it doesn't first make a lower low and just comes up, those people certainly on the close of business were caught. You can see what's gone up there. Now, one of the areas that it might go to, that becomes the question. And for me, what I devised in my charting course was I start looking, if you will, first at the swing line to get an idea of what the market looks like, and I have a higher high and low pattern, and then I put on my key averages. And what I'm looking for now is the 18-day average of closes. That number is 899.25. You got to 899 today and you stopped just shy of it. But that's often where the market will make a run to challenge that area. I hope it hits it. It would make it nice, but that's the basic thing that I look for. I next look to see what stopped the market on the decline. And I think you'd agree. The market got down last week, a big plunge, and this was last Wednesday to the lower Bollinger Band, bounced up on Thursday, and of course then you're going to get the Friday report. And that's what kicked it down. Now 3 times you challenge that lower band. We know that what? In a Bollinger Band, the theory is the market will trade within the bottom band and the top band, within them 95% of the time. So to get a bounce away from the band, no surprise. The other thing that I teach in my charting course is the first challenge of a lower band is often where a lot of pros take money off the table. Now in front of a major report, they might do that too. And to get this rally back up, not a surprise. So now the question is on the rally, will the market start stalling and start down again? And if it does, that could put in the lower high, lower lows, and then you've got a downtrend. Are you trending right now? No. You have a higher high and lower low. In terms of momentum, as of Friday, you were really oversold. So you get a bounce today. That doesn't turn the momentum up. You're just in an oversold market that had a bear trap when you took out today's high, and it's almost, in fact, for 1/4 cent, I might as well say it reached where it had to go. In the meal market, let's see if it had an outside day down on Friday. Certainly not. So the markets had a pattern. This is Friday's action of higher high, lower low, resistance, the 18-day average, and you got back to the resistance point. Did anything change today? Absolutely not. The momentum's up. Well, let me change that word. The bias is up. The bias is up because you're over the 18-day average. Momentum did not change. Momentum is set by the slow stochastic. My bad vernacular. So I'm looking at a totally neutral market here. In soybean oil, you have what's called an embedded reading. An embedded reading occurs when the two numbers that make up the slow stochastic have several days or more under a reading of 20. That's a bearish embedded reading. Over 80 is a bullish one. Until the red line closes over 20, I expect the pros are going to step into the market and be sellers. I won't change my opinion until that happens. In the corn market, now let's go right here. This is corn. Look at this monster move. The market finishes the day out on Friday at 356.5, just under the lower Bollinger Band, and you climb back into the band today. I'm thinking that because you've got the lower highs, the lower lows, and that is the high of the outside day down, that the pros will be looking at this market and saying to themselves, if it can get up to the 370 zone, maybe the market gets away from being oversold, and that might be where they decide to protect themselves. What else do you think? I think the first challenge of the lower Bollinger Band on Friday was an area where the pros are taking some money off the table. Now in the wheat market, you have a different type of look. You have a market that's got a higher high, lower low, and it's finding support against the 18-day average of closes. No, it's not trending. It's still got a lot of different parts that are not in sync. You have the bias up, the momentum pointing down, and no trend. In the sugar market, I thought today was fairly important. The market, when it broke through, and I'll take today's action out, when it broke through 1242, you'll see the momentum started down. By end of the day, the momentum came back. The market had an outside day up. I'm not expecting a lot more than 1272 to 1288, but there's no reason to be short anymore. That's the biggest story going on. Now you got a lower low and a higher high. You have no trend anymore. In the coffee market, there's another seasonal, I hate to say it, to the downside coming up. This market has trouble on each rally to the 18-day average of closes, and it's failing. Now, one of these times it will do and go get through it. Look at your palladium chart. You get these setups, and you've got to always be aware of them as to what happens against an 18-day average. This is not that setup yet, okay? Not. I want to be clear. So it's still running into the resistance. But when you get into the metal charts and you look at the palladium, you'll see how it fell down to the 18-day average. And then one day it had a very type of area where it just hung there, and had it dropped again, you'd lose and get the swing lines to the downside under the 18-day average. You hadn't done that. I'm not getting any pattern like this. I've got the lower and low. Even if I took out the lower high here, I'd have a higher high over the 18, but a lower low. This market's still bearish. Oversold, but bearish. Cocoa market, breakout to the upside. A lot of concern recently about weather in the cocoa regions. And the market has been fighting a battle, and today the bulls just grabbed control of the market. Now, admittedly, you'll say, well, it's over the upper Bollinger Band, and you're right, but it's pushing the Bollinger Band. It's not getting away from it for 1, 2, 3, 4, 5 days in a row. It is not embedded. It's overbought, and typically to push out the top or bottom of a band, you either get overbought or oversold. That's what it's doing. This market, though, is interesting in that it doesn't act like a market that doesn't have something going for it. In the cotton market, we have a higher high, lower low. That's not a trend. You have momentum here that is what? Are we embedded? Maybe we should look at that. Both numbers are over 80. Both numbers were over 80 on Friday. And both numbers were not over 80 on Thursday. You just have an overbought market. Now, depending on what the price does tomorrow, the odds will tell us then. Do we embed or not? I don't know here. I'm going to call it neutral. In the cattle market, another type of one of these plays. Look at the cattle. You had an outside day down on Friday. Were you going to make a run for the lower Bollinger Band and the 100-day action was the question I had. But at the same time, what's the rule? We just talked about it in the grain. If you take out the high of an outside day down, I'm going to call it a bear trap. And that's what you sprung. I'm not surprised if price will make a run. I don't call that yet the run to the 18-day average of closes. Now, the bears will grab back control of this if they can take out the swing line low again. In fact, let's say the lowest low, yesterday's low, Friday's low of 118.85. Other than that, I wouldn't be surprised if market tries to work up a little bit. Feeder cattle. This is a battleground on that too, and it was the same thing. We had an outside day down, we took out the high, but you fell right back down today. You finished up at 148.87, which is still under the 18-day average. It either is going to make a run to the upper Bollinger Band, which is rather too far away for me to think that anything's going to happen. I mean, it's one thing to move 100 or 200 points. To move 5 cents is an awful lot, but doesn't matter. It sprung a trap. You have to take out Friday's low to put the bear in control, and that number was 148.32.5. That's what I'll be looking at. I don't see anything here to be done. In the hog market, when we lost the embedded reading right through here, that's when we put into the idea that price and the 18-day average would make a run at each other unless the very next day after this you regained the embedded reading, which it did not do. That puts the two on a path to hit. They did it today. I call this market now more imbalance, and I'm waiting to see what the next thing is going to be. It still has higher lows, higher highs. Therefore, it's working off present tense an overbought condition. It's still overbought because one of the numbers is over 70 on the slow stochastic. When both get under, it won't be. So that's how I'm looking at it. This coming week, which is Thursday to be specific, April 4th, I'm going to hold another live webinar. Now, you bring your questions. It can be on stocks, ETFs, futures markets. The whole idea is a chart to me is a chart. If you can give me a symbol, we can chart it. I don't mind if we take the name off the chart. In my charting course, that's what I teach you to do. And that's how I teach it. I take the names off the charts because I want you to think patterns. I want you to think indicators, put the parts of the puzzle together, and treat it accordingly. Does that mean the fundamentals don't come into play? They come into play all right. However, I believe price is the discovery tool, not fundamentals. So what I tell you to do is in front of major reports, get out of the market. That could be a change of the fundamentals, and shortly after the algorithms come back in, which is short period of time, then you take another look at the marketplace. Futures are not traded like stocks. In stocks, you don't have expirations. In stocks, if it's Tiffany, IBM, whatever the heck it is, unless the company's bought out, name disappears, goes out of business, it keeps going. Try trading that in June gold. By the end of June, it's gone. There'll be another gold contract. To get your invite, I've already sent a group out. You can call my staff. You can click up here, by the way. You're going to see on our screen that you can click a link here. You can get to it that way, and what you do is you got to register. After you register, user ID will be sent to you. Well, it's really a password. I won't tell you what it is. You got to sign up to get it. We start at 12:30 p.m. on Thursday. We will end at about 1:15 in the afternoon. I'm Ira Epstein. Hope you register for it. It is free. Take care.